In less than 24 hours, both the weekly Gaussain channel and RSI will be closing above their higher timeframe triggers. This will result in a huge shift in momentum and possibly a macro continuation upwards. Let's go ahead and dive into the video. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the weekly chart. We're going to be discussing the RSI and Gaussain channel, both indicators showing signs of massive bullish shifts in momentum and direction. We're also going to go over the small time frame price action and discuss the possibility of a healthy correction. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We do daily videos for Bitcoin focusing on the facts, the data, technical and structural information, the economy, and the news events. No hype, no BS, no emotion, pure raw TA. That is the kind of content you like. Join us on Telegram. That is going to be the second link down below. You'll get access to charts, updates, videos, educational posts, news events, economic data, and so much more to keep you in the loop with not only Bitcoin, but not only cryptocurrency, but all the economic relevant data itself. You can also find us on the VIP channel if you're interested in joining our trading channel. We post trades of exact entries, exact stop losses, exact targets, and trade justification. We also have our group chats over here. You can see we have 4 group chats with all of our members. We have over 614 members. If you're interested in joining, go up to the top, click the pin comments, and you'll find all information over here, including our track record since 2021. Let's go ahead and dive into the video, starting off with the market data. So how are we looking as of today? For June, we are up 12.56%, a fantastic month so far. Excellent stuff to see. If we look at July, July is historically a bullish month, which gives us hope moving to the next month. That of course, if we can keep this momentum up, if we can close that monthly candle over 30,000, there's even greater probabilities, according to historical data, that we're going to be going up for the month. And that is, again, something we've discussed a fair bit on this channel. We're going to look for bullish continuations above 30,000. Looking at 24-hour volume, we are dropping down around 40% to 64 billion. Looking at 24-hour liquidations, we're down around 37% at 85 million. Again, none of this is too out of the ordinary, guys. It is the weekend. On the weekend, volume is generally low. If volume drops down, liquidations drop down. The sporadicness of the market, the swings in the market, they kind of compress, they kind of suppress. We see a lot of consolidation on the weekend. We see a bunch of scam wicks on the weekend in this low volume range. We don't really see a lot of directional decision occur on the weekend, but that could change. We'll discuss that in today's video. Moving on to the volatility index, we are starting to see the volatility index move upwards at the price over here. The 30-day has been tracking nicely. On the 60-day, it has been lagging a little bit, of course, it accounts for 60 days, but it should be moving up over the next few days quite a decent amount. Onto those liquidations, we can see between longs and shorts a very, very even split between longs and shorts, slightly in favor of the long positions as Bitcoin did correct ever so slightly. And again, this particular area where we are in with Bitcoin is very over leveraged. A lot of people are in late longs in this position, so any small amount of pullback is going to be liquidating a lot of those long positions. Let's go ahead and discuss the DXY. The DXY has seen a phenomenal bounce from the support level right over here. Again, not really looking at anything right over here. This is kind of our no man land territory between this downtrending resistance and support. We're kind of in this no man land. This is like a decision zone. If we break above here, we are going to continue upwards into our next resistance. If we break below, we are continuing downwards into our next support. Again, the direction it does break, whether it be up, whether it be down, will determine the overall direction, or is a good reflection of the market risk. If the DXY does go up, we do generally see the stock market and thus cryptocurrency fall as well. There are elements that can result in that correlation between those two asset classes or those two assets, I should say, weaken a little bit, and we'll discuss that in our prior videos. So if you're interested in finding out about why Bitcoin could move in the opposite direction about S&P 500, why it is paired to the US dollar, why it is pegged to what the DXY does, go ahead and check out that video. You can find it in our most recent videos. Moving on to over here, guys, S&P 500 is still looking pretty damn bad. We saw this rally upwards to retest the upper level of our rising channel formation. We've said ever since the resistance point, we've said shorts are in favor, expect the DXY to fall down. You can look to put your stops just above, but do expect the industry to come down. Expect that to move down over the next few weeks, particularly if the DXY does actually go back upwards. To invalidate this bearish structure, we do need to get above 4,500. You can see 4,500 area is this local top point. A weekly candle close above that level should be enough to invalidate this rising channel formation and push the prices upwards, potentially to retest some of these higher highs at 4,600. Until then, we are in a weakening channel. This is a rising channel. Expect the price to move down from this range towards our POC, towards our horizontal supports, and towards this uptrending support line, which is our triple confluence. If we do end up breaking a weekly candle below, expect it to push downwards. Now remember, the DXY, the S&P 500, Bitcoin and S&P 500 have a general higher time correlation of around 70%. It's a strong correlation. The intraday or weekly moves are sometimes a little bit uncorrelated, meaning the general rate of return between these assets change. Sometimes Bitcoin performs better, but generally in the same up move, and S&P 500 performs worse, but generally goes in the same up moves. We've only seen in 2 instances where S&P 500 and Bitcoin have actually deviated from that high time frame correlation. The first time being the FTX crash, and the second time being when Binance was sued. And we've seen that correlation stretch now for about a week or so, coming on 2 weeks, but eventually that should come back together and we should see them move in similar directions. So we do see the S&P 500 coming down. That should be something we're watching for. But on the flip side, we're seeing Bitcoin print all these amazing bullish signals. If we break above 30,000, maybe it's S&P 500 that is lagging to Bitcoin. We'll discuss that in another video. But let's go ahead, guys, and get into the crux of today's video, which of course is going to be the weekly. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Chart, so we'll dive into it now. What we're seeing is 2 things, and I want to take today's video a little quicker, but I want to make sure we go over these 2 points in quite a amount of detail. What we're seeing is 2 particular indicators on a chart. First, we're seeing the RSI. So at the bottom, the RSI is a momentum indicator. It represents speed, velocity, and momentum. It represents momentum in the form of speed and velocity, okay? So it isn't really an exact reflection of price action. It's the derivative of price action. So we can see discrepancies between what the RSI is doing, thus what momentum is doing, and what the price action is doing itself. We can look at these discrepancies to actually find inefficiencies in the market and thus predict the next move of Bitcoin based on the perceived weakness or strength we derive from the momentum itself. So that's the RSI. We'll come back to it in a second. The Gaussian channel is really effective on higher timeframes to predict when the price is basically flipping from weak downtrends into strong downtrends, or from weak uptrends into strong uptrends. What we're seeing here is a flip from a weak uptrend into a strong uptrend, meaning a weak uptrend being the point of which we entered the lower band of the Gaussian channel, and the strong uptrend starting from the point of which we close a weekly above the upper Gaussian channel. So let's focus on the Gaussian channel first, and we'll come back to the RSI later. What we are seeing here currently is a weekly candle breaking above the upper band of the Gaussian channel. And the upper band of the Gaussian channel is currently sitting at around 28,800, give or take maybe a couple $100. It's kind of hard to see in this chart. Around 28,800 on the weekly. The price is currently sitting at around 30,500, so around $2,000 above that breakout point. We have 20 hours left on this weekly candle. Now, if we take a look at the historical price action for Bitcoin, there's been 2 instances when we've gone from green trend to a red trend and then broken upwards. Both of these instances have occurred actually around the same point in time. So we'll show you that really quickly. If we remember, these structures being this breakout point here, and this breakout point here, and we go to our 4-year cycle chart and take a look at the monthly chart, particularly the points of which where the price breaks a monthly candle above that red resistance line, the red resistance line being the bull market / bear market low point before we fell off a cliff and went to essentially the bottom. All right, that was essentially a point of which we really entered that capitulation phase. We broke that bear market support and went down to make a new low. But by no coincidence, if we look at these two charts side by side, we can see the points of which we break above our. You can see the dotted line on the left-hand chart. If you look at the vertical dotted line, you can see it's moving. The point at which we break above that Gaussian channel directly corresponds with the monthly chart at the point of which we close a monthly candle above that resistance. If we go back further to the first one, we can see once more. If we look at the point at which we break up, we're looking at that same point. We're breaking above that horizontal resistance line. So it does correspond with our horizontal monthly levels, meaning if we do close a weekly candle above this Gaussian channel level, it is highly, highly probable not only do we enter a uptrend to go to $48,000 over the coming months, but it is very, very unlikely we end up closing a weekly candle back below the Gaussian channel. So let's take a look. Every single time we've broken above and closed a monthly candle, we saw that monthly candle close here, we never came back down and actually closed another monthly candle underneath that same breakout point. If we look at this instance in 2019, 2018, we broke above, we came down, we actually retested it, but we never closed a monthly candle back below it again until, this is the thing, until we retested and hit our 48K target. So again, you're probably thinking, well, but we did come back down. But remember, the target from the breakout is going to be that dotted trend line. We saw in this instance, we came up to retest that dead cat bounce, boom, over here, hit it, came back down, perfect, okay? When was that retracement? Okay, in 2014, that retracement occurred at this level over here. If we look at 2018, we broke upwards. Awesome. We came up, we retested a dollar trend line, which was the high point of the dead cat bounce. Awesome. That move was completed, and then we came back down. So even though that we did eventually come back and retest it, we hit our bullish target. We hit our breakout target first, meaning it doesn't matter if we come back down and test it again. So assuming the same thing happens this time around, what could we actually expect? We'd expect a move eventually up to retest $48,000, which is going to be that similar dotted trend line on the monthly chart. You can see the dotted trend line right over here corresponding to $48,000 before we come back down and either retest the Gaussian channel and push back upwards or break in it temporarily and push back upwards. So this weekly candle break is incredibly significant in terms of the macro trend directions. It represents a huge, huge shift in directional strength for Bitcoin on the macro and the weekly chart. It is not something you should be ignoring. It is very significant. We have 20 hours until that candle closes. And that is just one point, guys. That is just one point. If we look at the date range on this, so last time we saw that move was 213 bars ago. So this is a weekly chart. So nearly around 1,500 days ago. If we look at the prior time, we saw a pretty similar distance if I'm not guessing, it is around 1,288 days. And again, these days, although not similar, they do fit in with the bear and bull market ranges. If we look at the bear bull market ranges, this decision time is around 16 bars. If we look at this instance, it's around 16 to 17 bars. If we look at our probable instance over here, it's around 16 to 17 bars. So it does occur within that 16 to 17 bar period of the consolidation phase after the bear market, but was progressing into that bull run. So let's go over one more indicator, which is going to be a just as significant, if not more significant one. And a lot of you guys who have been watching the channel know I'm a momentum trader. If you're into VIP, you know that is what I do. I trade based on momentum. So this right here is a particularly significant data point for me, as I use this data point not only predict the bull run tops and the bear run lows, but also these massive swings we've gotten on the higher time frame charts, such as the swing from 30,000, okay, 30,000 down to 25.2, we actually used the 62 on RSI to predict that. So let's take a look at the 62 on RSI and show you guys why it's so significant. We're going to go all the way back to 2018, and then we're going to show you from our current date. So every single time we break below the 62 on RSI, I'm going to draw a red line. Okay, every time we break below it, I'm going to go ahead and draw a red line. Bounces and retests don't count. We actually have to break below that 62 point. Every single time, I'm going to go ahead and draw a line. Let's take a look. Another instance over here, and then we had our final instance right over here. If we look at the distance from the break point, okay, the point at which we get the signal and the low, we can see every single time without a fault, we have seen at least a 20% correction for Bitcoin when we have had that weekly crossover in momentum. You can see it every single time. Even this time, we saw a 20% correction from 30,000 down to 25.2. That is 1, 2, 3, 4, 5, 6 instances in the last few years without absolute fault. And we can go further back and show you the same thing. We'll see those corrections, but if we start going too far back, again, the market cap becomes quite small, becomes more volatile. These moves become smaller and smaller. But let's take a look now at the opposite. Every single time, I'm going to go ahead and change this one to green really quickly. Every single time we break above the 62 point on the RSI, so let's go ahead and put that 62 point back in on the RSI. Sorry, computer just glitched out there, guys. We'll go ahead and bring up the 62 on the RSI, which is over here. Perfect. Every single time we push a green candle, or should I say a breakout above that point, we see a continuation upwards. So let's take a look at this instance over here. There's instance 1, we broke above. Instance 2, we broke above. Instance 3, we broke above. We'll keep going. We'll go all the way to the end. Instance 4, right over here, breaking above. Instance 5, breaking above. And instance 6 is a question mark, but we're currently breaking above. If we look at the progression in price from those breakout points, we can see once more, without a doubt, every single time we see that weekly shift, we see a strong move in the upward direction. The smallest one has been around 30%. In fact, actually the smallest one was around 20%, which was the most recent one. But we are seeing that occur once more. So this weekly candle is a very significant one, but not only is it going to reflect a shift in macro direction, which is more probably going to lead to a monthly close over 30, but is going to result in a weekly shift in the RSI that could propel the prices higher based on our historical data. So really quickly, guys, let's go over, if it does happen, if we do get the weekly close, a monthly close over 30, we do expect 30,000 to hold temporarily. We do expect the price to eventually move up to 48,000. Again, we discussed all about the bull market in our prior video, and we discussed exactly what to expect. Now, we do have 5 days and 21 hours left on the monthly candle. So the weekly candle, although it's significant, it doesn't confirm the fact that we're going to close over 30,000. What it does say is now we're getting this close on the 62. Now we're breaking over the Gaussain channel. There's a higher probability that we now close over 30,000 and get that monthly candle, but it's not a certainty. Okay, it's a higher probability, but not a certainty. Remember, where does the lower band of the Gaussain channel lay? 28.8. So we do come down and retest it. Although we'll be above it, we'll be underneath the $30,000 trigger on the higher time frame chart. So that could delay all this for another month. And we have seen delays like that before. If we go back to our historical price action over here, we saw a lot of compression and consolidation around that prior point in 2016. 2018 was very different. 2019, we just saw a massive move upwards, but we have seen a instance where we've consolidated sideways along this $30,000 mark, along that lower horizontal resistance, which we could potentially see this time. I'm not going to say we are. I don't like to say certainties on this channel. I definitely don't like to say certainties in general as a trader. Everything is up to speculation. Everything's based on probabilities. All we're doing is trying to derive historical data from the charts and use that to formulate a probable scenario and then apply risk management to that scenario to make sure we can capitalize on anything that does occur. So let's talk about the smaller time frame price action, guys, and then I think we're going to go ahead and wrap up the video. So really quickly, I want to go ahead and change this chart over actually to the Bitcoin derivative chart right over here, just looking at a smaller time frame chart, and keep this higher time frame on the side just as comparison. So first and foremost, I want to show you this. This is going to be our daily chart. We have a horizontal support right over here. For the bears to push the price back down, they're going to need to close a daily candle underneath, or at least get the daily candle underneath 30,434, okay? This is represented as the local top point of this move upwards. Until then, the bulls still have strength. This is very strong. This is a nice move upwards. They are showing strength. If they are unable to hold the price over this local top point, we could see what you call a double top formation, and we could actually see a continuation back down to retest maybe this low point right over here, sitting around 28,400. This is going to be the target if we break down. So if we lose this level here, I'd be expecting a higher time frame swing, potentially as low as 24,900, but looking for these gaps in the BRPV, such as here, for take profit levels. We're going to correspond these with these local high ranges. You can see in these wicks, we can take profits around that level. But right now on the daily, it looks strong. Weekly looks strong. Expect upwards until we lose this level. If we lose that level, we continue toward the downside. So, you know, bulls don't have full control here, but they definitely have enough control to push this price higher. The question is, are they able to hold it over the weekend? So now we know that level is significant, let's go even deeper into the charts and talk about the smaller time frame, and then talk about the probabilities of a continuation downwards. So on the 1 hour chart, we can see a few things right over here. First and foremost, already what we're seeing is the price is consolidating nicely sideways in a uptrend. This, of course, is going to be a bullish consolidation. We have this consolidation upwards, okay, more or less upwards and sideways, and we have momentum falling. This is going to be a bullish reset trend, okay? It is a bullish compression, it is bullish consolidation. When does this consolidation flip from bullish to bearish? We need to see a flip in the trend. Currently, as you can see, according to our moving averages, this is our 50 EMA. The smaller ones I'm not going to go over. We have a variety of different smaller moving averages in there, such as 15, 17, 22, 26, 28, 32, 4, and 50. Sorry, I said I wasn't going to do it, but I did it. It's too much of a habit. We are going to see a shift in strength if a hourly candle closes below the 50 EMA. Now remember, we also have that key point of support at 30,334. So if we do close a hourly under 334, that it will correspond to a hourly close under 50 and an hourly close underneath that local high point on the daily, and could be the trigger for a push lower to fill some of these gaps on the VRPV. So I'll be watching for that. Expect that to occur if we lose that level. As you can see, we have a very, very tight margin between strength now and probable weakness. So a very tight margin between those 2 points. Watch the crossover for those to actually flip. If we look at the smaller time frame price action once more, let's go ahead and delete some of these lines. Okay, we do have a probable, and I say probable because it's not confirmed, but we only have 2 points. This is going to be a probable uptrending trend line developing, which we can go ahead and take the uptrending resistance, we can copy and paste it over, apply it to the low points, and we kind of find this line of best fit between our local high points of the prior move upwards and our local low points of the current move upwards. And we can see that not only does this uptrend kind of form confluence around the 50 EMA, around this VRPV gap, but as well as the 30,344 level. So therefore, once more, we can say with certainty, if this level does break, we have a very strong probable shift in direction, and thus that shift could take us toward the downside, and if extended, could take us to retest that low point we discussed right over here. Now, if that does happen, it needs to happen within the next 5 days, because if we get a monthly candle over 30, the directional strength upwards shifts too aggressively. So if we do see this move happen, we need to actually see it happen within the next 5 days, and particularly a weekend move will be a great time to start, but we have to wait and see what occurs. So watch that move, guys. If we do not do that, we are looking for continuations back upwards. Again, this is an uptrend. We could definitely come back upwards and retest, okay, some of these high points. We could push upwards and retest this. Sorry. There we go. We can push upwards and retest this uptrend again. Maybe one more move up to 32,000 will be possible if we stay within this uptrend. Anyway, guys, I'll leave it there. I've given you a lot to think about today. There's obviously a lot going on the charts, but I've given you some key levels to watch. I've given you some key triggers to watch on the macro. I hope you had the fantastic rest of your weekend, and I'll catch you guys in tomorrow's video. Cheers.